Hello everybody, what's going on? Few big updates are coming from NIOs and take a look at this. NIO weekly delivered data for the period November 3rd to November 9th. Registrations were around 12,900 plus units. They have been on the fire lately, repeatedly breaking the 10,000 units weekly. This isn't just a number, it's a monumental milestone that validates their entire multi-brand strategy. The numbers show strong contribution across the board. Neo Premium brand, the rapidly expanding family-oriented Onvo brand, and the growing volume from the new smart compact brand Firefly. Here I would say that this is market segmentation mastery. So the question here is that how does this affect the stock price? The delivery ramp up is the fuel for the future financial success. Record deliveries pave the way for record revenue. We know from the third quarter 2025 results that NIO beat analyst consensus on EPS and they guided positively for the quarter thanks to strong demand for models like Onvo L90 and the all-new ES8. More cars delivered at a faster pace means a higher top line, and that exactly what we are seeing now in the fourth quarter. Second thing is the valuation gap. The stock has seen a nice run recently, roughly 50% in last 3 months. Yet many analysts still see it as undervalued relative to its potential because the market is still waking up to the power of the three brand portfolio. This aggressive scale up is the key to driving down the cost and finally achieving profitability. Now let's talk about the future outlook. NIO is planning for an ambitious 150,000 deliveries in fourth quarter alone. That target is only achievable through these consistent high volume weekly numbers. Every week above 12,000 units is a step closer to hitting that goal and solidifying their position as a dominant force in the global EV market. The picture is clear. NIO is executing. They have successfully launched their multi-brand strategy. They are scaling production exponentially and customer demand is proving to be incredibly robust. This is the moment when a company shifts from growth story to an execution story. With the stock still trading at modest level compared to its long-term potential, don't just look at the stock price today, look at the trajectory built on these record-breaking delivery numbers. NIO is no longer just playing the game, they are setting the new pace. Investors who recognize this strong operational pivot are the one who will be richly rewarded. So get ready for it. With that said, thank you so much for being here. See you in next one. Hello everybody, what's going on? Few big updates are coming from NIOs and companies sent a powerful signal to the world yesterday. On November 11th, NIO officially launched both its premium NIO brand and its urban focused Firefly brand in Greece. This might sound like a minor geographical expansion, but trust me, it's a massive sign of strategic genius. We have seen the pictures, a major event with their new local partners, Motor Dynamic Group showcasing both their premium lineup and the compact next generation Firefly vehicles. Greece is the getaway. Earlier this year, NIO announced its ambitious plan expansion into 7 additional European markets by 2026, including Austria, Hungary, Portugal, and more. This Greek launch is facilitated by a strong local distributor model proves their commitment to this multi-channel scalable strategy. This move is about de-risking growth. Instead of solely relying on the capital incentive direct sales model they pioneered, NIO is now proving it can be flexible and adaptive, partnering with established groups that have deep local market knowledge. This hybrid approach drastically cut down on initial cost while speeding up the market penetration. The real game changer in this market isn't going to be the NIO, it is going to be the Firefly because the real volume comes from masses and that's where Firefly step in. Firefly is targeting the incredibly lucrative compact urban EV market, challenging players like Mini and the Smart. By launching both brands simultaneously, NIO is executing a masterful multi-brand strategy. designed to capture both ends of European EV spectrum, premium quality and mass market volume. This is how the industry leaders like Volkswagen achieve dominance. NIO is positioning itself not just an EV maker, but as an full suite mobility solution provider. This diversified portfolio is exactly what long-term investors would love to see. So the question here is that what does all this mean for the stock? Here I would say that NIO is not a trade, it's an investment in the future of mobility. While the stock price may be trading in the mid single digit right now, the valuation doesn't fully account for the long-term structure value of their ecosystem because we have a strategic European penetration with a scalable low cost model, then a dominant multi brand portfolio. Also, we are delivering record numbers every month in China, then a technological moat with battery swap and autonomous driving subscription. Right now, NIO is laying the groundwork for a massive payoff. The moment the market sees consistent positive gross margin and a clear timeline for the net profitability, the fear premium will vanish and the stock will be primed for a significant rally. Hello everybody, what's going on? Mark your calendars because on November 25th, before the bell, NIO will release its third quarter 2025 results. And trust me, the narrative around this stock is about to change because the delivery numbers already confirmed one thing. NIO is hitting its stride. The market already knows the delivery figure for third quarter and they are spectacular. NIO delivered a record 87,071 vehicles in third quarter. That's not just a nice number, that represents a phenomenal growth over 40% year over year and more than 20% quarter over quarter. Yes, they hit the lower end of their guidance, but let's reframe that. In a brutal, highly competitive EV market, hitting any record guidance is a massive win. It shows stability, execution, and reliable demand for their premium lineup. This record volume is the key to everything that comes next. Now, what are we looking for in this November 25th result? We know the volume is there, so we are looking for the margin expansion. As NIO scales up their production, those gorgeous fixed costs get spread thin, meaning we should see a noticeable jump in their vehicle margins. When you combine record deliveries with efficiency improvement from their newest manufacturing facility, and optimizing their supply chain, third quarter will show a clear path to operational profitability. The street is looking for narrowing losses, but I believe NIO will deliver a positive surprise, providing that the foundation is finally solid enough for the hyper growth. However, this third quarter result isn't going to be about the past, it is going to be about the management commentary for the future. And this is where NIO leaves the competition in the dust. We need to hear updates on two major catalysts. First, power swap. NIO's battery swap service model and its massive power swap network are a competitive moat. This service ecosystem builds incredible customer loyalty and provide a continuous revenue stream, an aspect that market is still seriously undervaluing. Second thing which we should look is revenue from their Firefly brand. That is a new compact sub-brand and we should see that how much revenue that brand is generating for the company. So the big question here is that where does this leave the stock? The underlying business is scaling beautifully. Third quarter record deliveries are the clearest signal yet that NIO's unique strategy, premium vehicle battery swapping infrastructure and impending mass market entry is working. Now the stock is not just an EV play, it's a tech and service giant in making. The November 25th earning report is likely to be the catalyst that forced the market to re-rate the stock. I see huge upsides from here. NIO is a strong buy for me going into the fourth quarter.